CNBC TV 18. This is our Power Prep segment. So we have our research team joining in with what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, it's time to come to you now. What is the market setup looking like today? Looks like a good start.
Absolutely right. Good morning. Now that the major event is out of the way, most of the US indices, like we mentioned before, have given a relief rally. Yesterday, what's actually happened is that all of the US markets, including the Nasdaq, gained quite significantly. Now, crude oil movement, one that we focus on. Now, Brent futures yesterday gained and now hovering around the $85 a barrel mark. But coming to the Indian markets, yesterday's trading session, range-bound session, but the Nifty did close below the 19,000 level, and that'll be one important level to continue to track even in today's trading session. The metal index yesterday was the top sectoral loser. JSPL, remember, was the top laggard, and yesterday's results of Tata Steel too not very encouraging. So that'll be one pocket of the market that we will continue to keep an eye out on. Now, along with that, also remember the rupee yesterday reached an all-time low. So along with that, all of the IT companies too will also be something that we would need to watch out for. Key cues today, result reactions. Remember, Tata Steel, Britannia, GCPL, Hero Motor, all of these companies declared their results post-market as yesterday. Markets will react to that. And some key results today, Tata Motors, Container Corporation, Dabur. These are some of the companies that will be declaring their results today. Asian markets, GIFT Nifty, both of them indicating a gap up start for our own markets.
Yes, gap up start it is. That is what the GIFT Nifty is implying today. Thank you so much, Vivek, for joining us with all those cues. Over to Surbhi now. She has a long list of stocks that she's tracking for us today. Surbhi.
Good morning. So it is a long list. Let me start with Tata Steel. The numbers were weak, primarily led by losses in the Europe segment. Revenues at 55,682 crores, margins at 7.7% versus a poll of 8.4%. Britannia, it was a miss on the top line, but the company saw a sharp margin expansion. Revenues at 4433 crores, EBITDA at 872 crores, and margins at 19.7% versus a poll of 17.5%. Hero Motor, it was a decent set of earnings. EBITDA in line with estimates. Revenue up 4.1%, EBITDA up 28%, margins at 14.1%. Godrej Consumer, the revenues at 3,600 odd crores, EBITDA at 704 crores, and margins at 19.5%. Nerolac, weak top line growth, but the margin improvement was good. Revenue growth of just 1.3%, EBITDA growth of 37%, and margins at 14% versus 10% same time last year. Syrma SGS, again, good revenue growth, but margins were weaker. Revenue up 52%, EBITDA up 4%, and margins at 6.9% versus 10.1% same time last year. GMDC, it was a weak set of numbers. Revenue down 29%, PAT down 51%, and EBITDA down 69%.
Okay, all right. Thank you so much for joining us with all those details, Surbhi. Let's talk all about the F&O space. Nigel is joining in with all those cues. Hey, Nigel, morning.
Morning. Yesterday we ended a little bit lower, and it wasn't the Nifty Bank that played out weekly expiry that in fact dragged in the final out of trade. It was the Nifty IT index that was under some pressure. So you see, the Nifty Bank actually came off the day's low at around that 42,500 odd. But that's the one we're talking about. The Nifty IT index did move lower. The fear could have been that maybe, in fact, we heard a hawkish-sounding Fed governor, and that's what could drag the Nasdaq as well as the IT stocks today. So it was some pre-positioning that we saw. I expect that to reverse today, given that the commentary coming in from the Fed has been read dovishly. And in fact, you have the bond yields as well that have cooled off. So the IT index is something that I'll be looking at. What did the FIs do yesterday? Well, they added shorts yet again. They added close to around 10,000 short contracts and 5,000 long contracts, which takes the short positioning in percentage terms to around 85%. But in absolute terms, it's the highest we have seen since the end of March. And that's the time from where we did see a bit of a bounce on the Nifty, and that's where the Nifty made a bottom as well. So as we speak, the Nifty, the FI net short positions on the index futures is at around 1.6 lakh contracts. It's gone up marginally from the start of the series from around that 1.5 lakh contracts on. Two strikes were very active yesterday. You saw the 19,100 call and the 19,050 call. Well, between them, they added close to around a crore shares on. So aggressive writing is what we saw at that level, which got the PCR from around that one that we saw just a couple of sessions ago. It's come down to around 0.82 odd. So it's trading closer to around the lower end of its band. So the levels that we're tracking at, since the 19,050, 19,100 call were written very, very aggressively, I punch in the premiums that we saw yesterday, and around 19,170 becomes important resistance zone. On the downside, 18,950. That's been a bit of a buy zone, and that continues to hold. So GIFT Nifty suggesting we open above that resistance zone that I've given you. well, we need to sustain those levels. That's going to be very, very important because as of now, today is the weekly expiry and positioning is such that we don't get past that 19,170 odd mark. Back to you.
Take that point. Thank you so much, Nigel, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market as always. Stay tuned for that.